Ahoy there, traders. Ahoy. Welcome to another Friday morning session. As always, thank you for just taking a moment out your day. I really do appreciate it. It's not unnoticed that maybe you've got other things to do and you've decided to spend it with me and everyone else that is in our little chat room. Great to see a nice list of the old names. There's several new names. Again, Brian, Class, Dave, Diana, Don, Everett, Glenn. I'm just skipping down, Kyle, Scott, Vito. Again, if I've not mentioned your name, it's nothing personal, unless it is, in which you'll never know. But nevertheless, welcome, welcome one, welcome all. So this week's title is Stocks that go stonks. They go up and up and up and never stop. Just my little play on what's going on in the world of the markets at the moment. The stocks do tend to only go up at the moment. So it's just me having a little bit of fun. If you can't tell by the tone of my voice, and just following on from last week, my health is deteriorated still this week. So I'm probably going to be going at a lot slower pace. I'm probably going to have a shorter training session today. So if you'll forgive me that, but I'm not at my best today. But nonetheless, we'll see what we can do in the time that we've got. So the typical schedule is usually about 20 to 30 minutes. The way I talk, I could probably get to 60 minutes, but I won't be feeling great at it. But I'm probably going to have a shortened session. We'll take a look at the markets. We'll also review some of the trades that we've had this week. And we'll think about stocks that go stonks. Just following on with the theme of the last several weeks from the end of last year and coming into this year. Like, how do we scan for stocks? How do we find things that have potential? And that's all I mean by that. So we'll take a little look at that again and just look at some different ways to find stocks that look really interesting. However, before we do that, if today is your first day here and you want to know who this guy is with the weird accents, I'm not a Wall Street guru. I'm just a regular guy who managed to figure it out. And I figured it out quite a while ago. And the good news is it's simple to replicate, or at least I think it's simple to replicate. I want the replication part for myself first. And a lot of our insiders heard me talk about it this week. It's because when I'm not well, I've got Crohn's disease, and there are times where I'm just not great. I am just absolutely not feeling it. But I'm not the sort of person that wants to pull a duvet over my head and just wallow in my own self-pity. I only really mention it because it's one of the things that I have to deal with on a day-to-day basis, week-to-week basis. But I want my production line replicatable process. I want it first and foremost for selfish reasons. I want it for me because it's for times when I'm not feeling great. So we're going to explore that. Again, we've been doing it the last several weeks anyway, but it's really emphasized when I'm not well. Anyway, it's simple to replicate. What we're trying to do is look for footprints of money flow. So we'll explore that a little bit more. A little bit about me is I'm just a regular guy. Again, I'm not a Wall Street guru. I just figured it out. I like to chill out. I like to read. I like to have a laugh. Usually like to have a bit of cake and go and explore a coffee shop, but we're on lockdown here in the UK. Can't really go in here, can't really do anything, but hey, that's just the way it is. But I do like to consider myself more of a lifestyle trader. I get to do whatever I want to do. Which is the definition of a life that you can dictate. You get to choose what your life is. I get to choose what my life is. My idea is not sitting on a beach with the laptop, but I do like to just have a lot of downtime, a lot of free time. My official backstory is I've been trading full-time since 2001. I've been hand drawing charts since the early 90s. I've managed client funds with assets under mine of 10 million, specialized in Forex for 12 of the last 20 years. Right now, I focus on stock options, and occasionally dabble on futures, and have done since about 2010. Mentored and coached thousands of people all around the world, from banks, hedge funds, institutions. But the one thing that is consistent is I am obsessed with helping you create whatever you consider trading successes. I've got a lot of time for serious traders, whether you're clients or whether you're just here on these free sessions, mainly because I never had that when I started out. So I just like to at least offer the ability to point you in the right direction. So that's my objective for these sessions. And if you want to take it further, if you want me to specifically help you, then obviously we can talk about that if it's relevant for your situation. Just thinking about the market review, we've got a few trades. We've had a few interesting trades this week and last week. Again, we've had some, my primary focus at the moment is the day trading. Let me just catch up. Primary focus is the day trading. I like trading at the open. At the moment, there's some great opportunities. Here's some from earlier this week. We kicked the week off with a great intraday trade. It was pretty much done and dusted in about 30 minutes. The lead-in time is we had to wait 30 minutes for the setup. So total, it was about an hour of waiting, but the reality is the trade was on for about 20 minutes. The risk is a multiple. It's a model risk, so you can scale it up or down, depending on your situation. But I've based the P&Ls there based on $250 of risk. So for $250 in or risk capital, you would have made about 600 on Monday to get the week rolling. Zoom's think similar. Again, we had a great trade on Zoom. This is more of a lunchtime trade. I'm just experimenting with some different time frames, always playing with the strategy because not everyone has a little bit of time at the open. Maybe you've got a little bit of time at lunchtime. So this is more of a lunchtime trade, same principles, $250 in, $362 out in about 30 minutes. Johnson & Johnson, I had a little dabble with similar patterns yesterday. They're not all winners. This is a break-even trade. I could have managed this better. Again, I'm not feeling great. It was a break-even trade at best, and the same with JPM. Could have managed this a little bit better, but just the way that it rolled out turned out to be a break-even trade. So there's my trading this week. Typically, we're doing this over the shoulder in sessions like this 3 times a week. And you can kind of watch me trade as I'm doing it. But that's really all I've got to report. So the big question, just following on from the original theme, is like, how do we find these stocks? Again, whether it's a day trade, again, that's just my focus at the moment. For the last several years, I've been mostly swing trading with a focus of getting paid at the end of the month. And again, at the moment, because of all the volatility, because of all the craziness, there's just so much opportunity out there, and it's just a little bit rude not to look at the intraday charts and just see what's available. The way that I like to trade is I don't want to spend all day doing it. I just want to pretty much focus in on what's available for me to trade right now, specifically today. Is there anything for me to do today? And, can I profit from it in that first 30, 60 or 90 minutes? And it's that logic, that process that I'm looking for. Or I've got that in mind when I'm constructing strategies, because what I don't want to do is fall into the trap of just sitting here in front of my computer all day, every day, and just locking myself to the desk. It's not pleasant when you think about it in that context. And when you first start out, it's all new, it's all shiny. Maybe it's exciting. Maybe you don't mind doing that. But after 20 years, how long have I been doing this? After more than 20 years at this, I really want to spend as little time as possible and get the most out of it in the least possible time. So that really influences my kind of strategy design. Anyway, with that said, let's go look at the charts. We're not here to look at slides. First port of call, as always, is going to be like, what's the market doing? What do we think's going on? And this is the S&P futures. We've got the daily chart up here, 60-minute chart bottom left. A thing that catches my attention, I don't know if you can see that too clearly. I'm just going to focus on the 60-minute chart. Cat's trying to destroy something. Just looking at the 60-minute charts, one thing that catches my attention, especially this week, this is this week's price action so far, is every bar, every candle has got a wick on the candle. Again, normally you'd expect the opens and the closes of each individual candle to be at opposite ends. You would expect to see wicks on candles at turning points. But for most of this week, you've seen wicks on the candles on every other bar. And this, for me, really highlights that we've got a very messy, a very weird... cat's behaving erratically. Very weird, very messy, very erratic price behavior. Just because it's got wicks on all of these candles, so it's usually not a good sign. It's usually an indication of a messy chart. So that's what I'm seeing on the futures more than anything. And again, when we take that observation back to the daily charts, we're not really seeing anything going on the daily charts here. You know, we've not really been seeing anything major. We're in this really tight, narrow band of price activity. We noted it last year, all through November, December. I thought we may have seen it break by now, and I actually thought the typical Santa rally, Christmas rally, might have actually just tipped things over into a very definitive breakout on the S&P or the Dow. And we're not really seeing it. We're making new highs, sure. But we're just starting to roll over. Maybe we're going to start to see a little bit more of a deeper retracement. I don't think we're going to see crash or sell-off territory. But certainly it's not looking like it wants to move higher for the moment. It doesn't really want to move at any direction if you think about the 60-minute price behavior. The Dow, there's similar comments as well. Unsurprising, it looks exactly the same. And then we look at the NASDAQ. NASDAQ's doing something very similar, making new highs in this very narrow band of price activity. Very slow, very steady movements. But then when we go and look at the Russell's just doing its own thing. It's I don't know if you can see the speed of movement, the velocity, the angle, if you like, is a lot steeper. It's a lot more confidence. And we're not seeing that same behavior. So the Russell is leading the charge. So when I make that observation, one of the things that I'll have a tendency to do is, okay, what's the Russell doing? What's the Russell doing? Because that seems to be leading the way. And the rest of the market seems to be following. So right now, if I just go back to the watch list on the left, I can see that we're down about 1.5%. So it's also not only leading the rally higher as a percentage, it's also leading the retracements lower as well. So I'd want to see the Russell turn around, and then you would probably see the other markets start to follow. So that's what my observation has been over the last few weeks, the last 1 to 2 months, is the Russell does seem to be leading the way. So I'll take my gauge off, well, what's the Russell doing? And then the other indexes will follow. Now, what you'll sometimes see is they will change from time to time. Again, one of the things that are along the same vein is I look at the Nikkei. Now, it's not necessarily, well, it's not a US market. It's the Japanese 225. But the Nikkei will be and has been for most of last year a good leading indication of what the US markets might do. And usually it's the other way around. It's like the US markets move and the rest of the world tends to follow. But what I have noticed is that the Nikkei seems to be moving ahead of the Western world. So it can be a good indication. And this is just something that you'll pick up over time. It's not something that you can read out of a textbook. It's just an observation. It's like, just watching, price behavior, price movement. And all I'm looking at is the percentage movements. Oh, the Nikkei is up 3% on the day. The Russell's down 2%. Oh, maybe the Russell's going to catch up to the Nikkei. That's all I'm using that information for. And it just helps give me a potential bias for the day, which way, broadly speaking, may the market go in the very short term. And it may also help give me some indications as to maybe I can have a little bit of a bias over my stock selection. So that's what we might do with it. Is it necessary to do this? Not really. It depends how deep, how involved you want to get with your selection. If you've got a larger portfolio in your account, it may mean that you might want to start some hedging. It may mean that you want to start take some profit taking, or you want to start balancing the books and look for some bearish positions. There's lots of reasons that you could find to use that information in the short term. But just on a day-to-day basis, if you're only trading 1 or 2 positions at a time, it's probably not a big deal to go into that depth. But again, when you've got 30, 40, 50, 60, and some of our students have 150 plus positions on at a moment, which is an extreme end of the spectrum of portfolio management, then you can start to look at this type of price behavior to help give you an indication as to, well, what might happen in the next couple of hours, the next couple of days, the next couple of weeks. Just to take a quick drink, if you bear with me. Right, so broadly speaking, the market is grinding sideways. I think that's the general consensus. There's a little bit of a retracement going on right now. And again, I'm not really seeing anything other than, this is probably going to continue. Again, we're in this kind of very tight band of price behavior. It's just oscillating up a couple of days, down a couple of days, up a couple of days, down a couple of days. We've just had the up, so probably not unsurprising that we're starting to see the down a few days. Thinking about like how do we find stocks that go boom in the night? Let's kind of start looking for some footprints, because this is pretty much why we're here today. The broad market's not giving me any indication, any bias. I think that's the conclusion that we've seen several times over the last few weeks. So what do we do with that information? Right now, it's just interesting observations. So when we're thinking about individual stocks, individual opportunities, then we can go to what I refer to as my master stock list. This is a universe of stocks that we've curated. I've documented and explained how we get this. I've got about 250 stocks. Oops. I've got about 250 stocks in my master list. If I include all the stocks under $50, there's about 500 stocks. All I'm trying to highlight is that my top 250 is stocks that are over $50. They've got an average volume of 1 million shares traded on a typical day, and they have weekly options. So that's what this list is made up from. And this is my little universe of stocks. So this means that that's my wellspring. There's a good chance that these are active, they're tradable, they're liquid. I don't have to worry about will I get in or out of a position. I'm not trading penny stocks. I'm not trading illiquid pink sheets. I'm not trading low floats. Before I even look at the chart, it's probably a good stock. That's the important takeaway here. So that is only about 250 stocks. So when I'm thinking about things to trade, whether I'm day trading or swing trading. So this is good for day trading or swing trading. Let me say it one more time. It doesn't matter whether we're day trading or swing trading. So we can find stocks that go boom in the nights quite easily with a simple scan. And what I want to try and focus on is is it likely to move today? Is it likely to move today? So at the moment, I do like to just sort by, well, what's active? So all you saw me do there was click this column, and it's got the current pre-market volume. Now, the stock market isn't officially open, but for those of you who weren't aware, stocks trade in the pre-markets. They have a pre-market, and some of them trade, 4, 5, 6, 7 hours before the market officially opens. A stock like Apple trades pretty much all through the US nighttime, early hours in the morning. So it trades outside of regular market hours is the point I'm trying to get to. And that's what we're looking at here. For example, NEO, the top stock there, this is the most active stock on my list today. So far, it's traded 3 million shares. That's a lot of activity when the market's not open. It's a hell of a lot of activity. Now, if it wasn't because of we weren't looking at the situation that we were in right now, and in the last sort of 6, 8, 12 months, because of the crisis thing that we've got going on, normal pre-market activity might be 20,000 shares, 50,000 shares would be a big number. So if you see stocks that have 100,000 shares traded, that's got to be institutional trading. That's the logical assumption. So out of my top 250 stocks here, I've got, well, about 45 in view that have shares of 35,000 or more shares traded every single day. So what you just saw me do there, I just put a little break in, like with the spreadsheets. I'm just going to put a break in so it's obvious. So all I've done is I've chopped off the bottom. And so, okay, well, these are the top 50 stocks that are most interesting today because there's good potential institutional activity. The next thing I'm going to do is sort this column. Again, just like a spreadsheet, I'm just going to double click it. The next thing I want to do is sort them by what's actually moving. So I've got all the stocks that have good volume And then I'm going to sort all the stocks by, are they moving in the pre-market? So not only are they active, but they're going to gap. They're going to gap from yesterday's close to today's open. So that means that something explosive is happening. Something explosive is happening. So what I can do is I can just put a little break in there. Let's sort them the other way. And all I'm doing is chopping off has it moved up or down 1.5%. So what I end up with is a list. I've got two lists now. I've got this top list here. These are stocks that have huge pre-market volume, and they've got big percentage moves. So big percentage moves. So for example, GSX, we've got GSX Teku. So what I can see is that we've got reasonable volume in the pre-markets, and it's going to be gapping up about 5%. Now, on the 60-minute chart here, I've got it set to show the pre-market volume. So it's just a slightly different shade. So it's gapping higher from here to there. So it's gapping up. So what I'm looking for is it gapping past support or resistance? It doesn't look like it is. So I'm going to leave that alone for the moment. So that's what I'm looking. So now what I can do, instead of looking at my top 250 stocks, I can just focus in on 15 stocks today that may be interesting. Again, what I'm looking for is, where's it gapping to, or potentially where's it gapping from? Is it gapping past support or resistance, or is it gapping up to resistance? Maybe there is an opportunity to take advantage. Now I'm going to stop at Zoom because Zoom's really interesting. Now, Zoom is, we can see on the 5-minute chart down here, lots of pre-market activity. There's yesterday and the price activity. We can see that price is gapping higher. But because we've got the pre-market trading, you can see it's traded there. But in the regular session, it's going to gap from yesterday's close to, this could be today's open here, and it's potentially going to be gapping about $13. Just looking at your comment there, Glenn. Could this be institutional buyers moving in? That's the question. That's exactly what we're looking for. So something like Zoom, you've got nearly 300,000 shares traded pre-markets. That's probably only institutional buying. Only institutional buying. So that's what we're looking for. So this is why it's in. Apologies if it wasn't too clear why we were doing this. That's what we're looking for, the institutional footprints. Because retail traders, even collectively around the world, they're not going to push hundreds of thousands of shares through in the pre-markets. The only way you can trade pre-market is at market with stock. And that's not usually for the faint-hearted. Most retail traders won't do it. Like, I'm pretty risk tolerant. And I don't like trading shares in the pre-market or the post-market. I have done it. It just doesn't sit well with me because you get whatever you get. If you take $1 slippage, you get $1 slippage. That's it. You don't get any, because it's not a liquid trading time of day. So you get what you get from a price point of view, and it's potluck. It is potluck. Nonetheless, that's what we're looking at: institutional footprint, institutional activity. And again, that's why it's important. So we've got big volume, probably institutional trading, and we've got a big percentage movement. So not only that, we've got an ignition of movements, like explosive movement is happening. So when I was looking at this earlier today before the markets opened, again, we're still in that kind of territory now. One of the things that catches my attention, and let me put the daily chart full screen. So we're looking at the Zoom. So would it be fair to say that we've got a long-term trend on Zoom? Long-term trend on Zoom. We've got a nice deep retracement on Zoom. So this could be considered a bull flag pattern. This is a very bullish indication. One of the things that I like about the daily chart of Zoom is we're just coming back up to this green line here. This is the 200 period moving average. Now, a lot of longer term traders and investors will use things like the 200 period moving average or the 50 period moving average, which is here. They'll use these as benchmarks to potentially be buying the dip and selling the rallies. And we can see that Zoom seems to have been, rallying and retracing to that 50 period moving average multiple times. And now we've got that move back to the 200 period moving average. And maybe there's a fresh round of buying that is about to go on. So we look down here, we've already had some gaps and movements earlier this week, and we can see that we've got this little bit of a volume influx at the bottom of this retracement here, which is near, not quite at, but near the 200 period moving average. So it just means that it's possibly going to be on people's radars for activity. Then when we look left across the chart, we can see that price gapped here previously. There was a big explosive movement historically. So if price is going to stop here and resume its upward trend, we've got a footprint to say, well, it did something similar last time. It exploded up from this point previously. There's a good chance it may do it again. And this is a good level on the chart. Again, when we add in that volume spike there, this is probably a great support / resistance area to keep an eye on. So the fact that we're at here now and we're starting to see price push higher is interesting. Now, then when we factor in that, well, actually, it's come up on my radar today. Again, it came up on my radar yesterday and the day before with this pre-market volume, and it's jumping higher a small percentage. So there's lots of interest and activity. Now, I've not looked at an intraday chart yet, but on the daily chart, would you agree that this looks really interesting? Give me a little, yeah, no, maybe, not sure. I've not done anything. I don't think I've done anything complicated here. All I've done is stated the facts as I see them. Let me just go through that again. We're at a mechanical stopping point, 200 period moving average. Look left across the chart, validate the location. Oh, it jumped previously at this location. Cool. Look down at the volume. Okay, volume made it jump previously there. So this isn't interpretation. This is a fact. That's not going to change. Great. So when we come back to this location, we've got price pushing higher, volume starting to increase again. We've got a long-term uptrend. And from a pattern point of view, we've got this bull flag. So these all suggest that there may be a bullish continuation. Great, that's what we're looking for. So it just means that maybe there's a good swing trade opportunity. Now, I found this with a day trade scan. But yet it's offering me more than a day trade. You can see that we used a classical day trade scan. So even if you're not day trading, these scans can be really useful. Like I don't intend to day trade. Maybe you don't have time to day trade, and that's okay. But you can really find good swing trade potential, good swing trade candidates when we have a footprint, when we have a good solid method, a good solid process for finding stocks that look really interesting. Just taking a quick drink of water, just bear with me a second. So now that we've got that in mind, we've got the how do we find something today? Again, Zoom's a good example. So now that we've got our footprints, could we start to dissect? And we've done this in the past when we start looking for footprints. Could we start saying, okay, well, what makes this a good, or the daily chart specifically, what makes it a good candidate? Prices pushed over the last 3 days, up, 1, 2, 3, with some elevated volume. And we've almost got a little bit of an inside bar yesterday. It's just rallied and paused. And you can see this rally pause, you know, quite frequently. And we've commented on this in the past as well. One of the things that we were looking at earlier this week is DocuSign. And we were looking at that same thing where we've got this consolidation on DocuSign here. And we had this rally. And we had this inside bar. And we've commented on this pattern before. It's basically a combination of a thrust move, that's the rally part, plus a pullback, a pause, an inside bar. I'm just doing PB for pullback or IB for inside bar, but that's what we're looking at. We've got this thrust move over, you know, 3+ days, followed by an inside bar. So that's something that you can mechanically scan for. Does everyone get that? Does everyone get that? We've done this in the past. We've done this before. But if we wanted to, okay, well, I found a day trade opportunity, and I want to see if I can find more zooms. Can we find more zooms? And DocuSign's a good example. I've been using it this week. It's not immediately going to be a day trade, but it's still looking good. It's your classic breakouts pullback setup. So can we find a DocuSign? Can we find a zoom? And essentially it's that thrust for over 2 or 3 days plus the inside bar. And this is where having a universe of stocks to work with, you know, we can put that footprint inside of the watch list. We can put that footprint inside the watch list. So this column here, this is looking for percentage change. So now I've got the footprint. Again, remember, I'm looking for that type of pattern because that's mechanical. Step 1 of my production line is look for a mechanical footprint. We've just identified it on Zoom. We've just identified it on DocuSign. We've got a mechanical scan that we can use to find day trade opportunities, but now we're looking at the context of the chart. You know, we're trying to kind of back ourselves into finding an opportunity. And this all dances around this question of like, how do we find stocks that go stonks? How do we find stocks that go stonks? That's what we're trying to do. So we're looking for those candidates. So what I can do is take this column now and do a slightly different scan. I'm going to leave the I'm just gonna I'm gonna leave the breaks that I've got there because I'm going to use them later today and I don't want to mess it up. So what I've got here is I've just sorted this column here. So what this is a built-in indicator. Most platforms will have something similar, and all it's doing is it's saying, hey, chart platform, look at the last 3 days. Look at the last 3 days and tell me like how much this stock has moved in the last 3 days. Cool. So again, Zoom is our benchmark. You know, that was our example there. Zoom is up 13% in the last 3 days. Great. And then what I can do is this next column here. This is a built-in indicator. Most platforms have something similar. And I can say, okay, now find me an inside bar. And this is how DocuSign, DOCU, this is how DocuSign flagged up. It rallied X percentage over at least 3 days, and then created this little inside bar for me. So that's how I can find that stock. So now that's on my radar. Looking at the context, I can then start to say, okay, well, now what's the visual inspection? So just because we've got the mechanical footprint, again, step number 1 is mechanical footprints. And then that raises your awareness to go and look at the chart. So then the second step of my production line is a visual inspection. Okay, what's it doing? In this case, it's breaking out of a consolidation. Great, that's something that I like to look for. Again, we looked at last week the 6 things that we can do. We can buy the dips, we can sell the rallies, we can buy the breaks of range highs or the breaks of range lows, or we can trade the range. The 6 things I like to look for. We looked at that last week. It's in last week's workshop. This is one of the 6 things that we like to look for. This is a breakout. It's moving beyond a consolidation. It's creating a lovely little pullback. And if it goes above the pullback high there, then there could be a lovely little swing trade. That's it. That's what we're looking for. That's the footprint. That's the end result of what I'm looking for. And this scan, searching for percentage difference in the last 3 days with an inside bar is giving me those, like, is there anything for me to look at today? So on row number 2 there, we've got prices up on Beyond Meat, 22% in the last 3 days. That's a big amount. I can also see the number in the box doesn't matter. It's just that it's got something in it, means that there was an inside bar yesterday. So I'm expecting to see something like that. I don't know what the chart's going to look like, but that's what I'm looking for. That's my number one mechanical scan. And then I'm going to do the visual inspection to say, okay, well, what's the circumstances around the mechanized footprints? Does everyone get why we're doing this and what we're looking for? So we've not looked at the chart yet. I'm just showing you what am I expecting to see? Great. Perfect. Thank you for the interaction there, folks. So let's go and take a look at BYND. So now that we're doing it, we've got the rally over the last few days. I've got inside bar. That's cool. That's great. So now looking at the context, let me just make the chart a bit bigger so it's easy for everyone to see. There we go. So now we're looking at the charts. Well, let's throw it open. What do you think? Let's look at the last 3. We can look at the last 3 months. We can look at the last 6 months. We can look at the last 8 months. We can look at the last time horizon. I always like to define it. So what catches my eye is we've got this very clear consolidation here. So although we've got a rally and we've got an inside bar, is it breaking out? Is it doing anything new? Let's throw the question open. So we've got the mechanical pattern. That's why we're looking at this chart. Step number 1, mechanical pattern. Step number 2, visual inspection. Do we have one of our 6 things? Is it dipping in an uptrend like Zoom? Is it breaking out of a consolidation like DocuSign? Or is it still inside this consolidation? Yeah, it's exactly, Scott. It's perfect. Yeah, it's not yet. Not yet. So this is why it's vitally important that we have a visual inspection. And this is where most new traders will fail, because they go, oh, I've got the mechanical footprints. I've got the indicator. Indicator X has said buy. It's giving me a buy signal. You fucking idiots. Like, it's just a reason to look at the chart. So visual inspection is, for me, vitally important to confirm what the mechanized evaluation is suggesting to us. It doesn't indicate, it doesn't signal anything, it doesn't tell us anything. It's just saying, hey, this condition's happened. That's it. Step number 1, this condition's happened. Great. Now let's look at the context. Visually, we can see that, hey, is it going up? Is it going down? Is it going sideways? Oh, in the last 3 months, it's going sideways. Great. What I want to see is it above the consolidation? No. Now, it doesn't mean that it won't provide a good bullish trade, but I'd be more inclined to be bearish, because until something new happens, the same thing's probably going to continue. Well, I'm coming on to that, Russell. So what would I wait for? What would I wait for? We actually covered that last week on last week's workshop, but recognizing the phase or a phase of movements, there's 6 things that we can look for. If price is in an uptrend, I want to buy the dip. So I'm waiting for the retracement so that I can buy the dip. And the opposite for sell the rally. If price is in a range, in a consolidation, there's 2 things that I can do here. I can buy the breakout of the range, like we just looked at on DocuSign. I can sell the breakout if it moves below the low of the range. If price is in the range, then I'd be looking for reversals off the range high or reversals off the range low, because my whole philosophy with charting is, until something new happens, the same thing's probably going to continue. Oh, thank you for, I'm getting lots of thank yous for changing the colors to make it stand out. But it's just trying to recognize what's going on. So what you saw me do there, Russell, for the first thing that you saw me do is define the time horizon. We can look at the last, everything that's in view. So we can look at the last 8 months, and we can do the same thing. We can say, okay, well, there's the range, if you like. You know, it's still in a range. We can look at the last 6 months, or we can look at the last 3 months. We always want to define a time horizon. Now, what jumped out in the short term was we've got this very clear barrier point there. Right there, there's a barrier point. We'll call it resistance. But price right this second, it's below resistance. It's not broken resistance. So when price is above there, we can start looking for a breakout. And if I go back to DocuSign, DOCU, you'll start to see that similarity. You've got the range there. So in the last 6 months, price is in a range. Great. Now I know the trend. Now we could say in the last 12 months, it's also in an uptrend, and that's okay as well. But in the last 6 months, the most immediate trend is it's sideways. Great. So I've got 2 choices. I've got 4 choices. Trade the breakouts, either above or below, or I can look for reversals off the range high or reversals off the range low. So I want to see, like, where's price right this second in relation to that range in the last 6 months. Oh, great, it's above. So I'm looking for a bullish breakout. So that's what we're trying to do. That's what we're trying to identify. So when we go back to BYND, we've got our mechanical footprints. So this is, it's not no, it's just not today. I don't need to waste my time. No problem, Russell. I don't need to waste my time trying to figure out, like, how do I trade this? Because the question that most newer traders and I think less experienced, less knowledgeable, there's not a polite way of saying it. I don't mean to, rag on anyone's lack of experience. I don't necessarily think lack of experience is a bad thing, but the trap that most newer traders fall into is, now I'm looking at this chart, how do I trade it? Well, we've come at this from the other end of the spectrum. I know what I'm looking for to place a trade, but this doesn't meet the criteria. So let's just move on. So at the speed of thought, this takes longer to explain than to do. I've found a mechanical reason to look at the charts. My visual inspection says, well, it's not quite there. For us at this point, step number 3, go and look at something else. We leave it alone. We don't need to waste time looking at the charts. So when we get to GSX, we've got 1, 2, 3 inside bar. I'm not seeing one of those 6 patterns. It's not buy the dip. It's not sell the rally. It's not breaking out. It's not in a range. Move on. That's the speed at which this is going on. So TSM, I've got a rally in the last 3 days. This is the scan that we did, rally in the last 3 days. I've got an inside bar yesterday. An inside bar right now. It's rallying in an uptrend. It's in an uptrend. It's rallying in an uptrend. I want to buy the dip in an uptrend. We don't buy rallies in an uptrend. So guess what I'm going to do? I'm going to leave it alone and move on. So this is the speed with which that we do these things. I've just realized, I think the inside bar's doing a live scan. Yeah, okay. So just show me what happened yesterday now. So I've set my inside bar scan to show me what happened yesterday. It was just showing me the live bar. So that's why there's looked like there's a lot of false signals. So I want to see completed information. I want to look at yesterday. So let's check out PDT. Pinduoduo. I don't even know what these do. So here we go. We've got, it's up, mechanical scan, up 3x% in 3 days. Plus we've got an inside bar. That's the mechanical scan. Number 2, visual inspection. Well, it's in an uptrend. Great. 3, 6, 12 months, doesn't matter. It's dipping in an uptrend. Okay, cool. That looks interesting. Yeah. So what we're doing, Russell, just picking up on your comment, Russell was just saying that new traders like you, they look at a chart and try and find a trade. Well, why don't we do it the other way around? What I'm trying to teach you, Russell, hopefully this is the big message coming across from today, is know what you're looking for first and then go and find a chart. It's do the opposite. Does that make sense? I think it's an interesting point you raised, Russell. But does everyone get that? I think that's a good message to take away. If you take nothing else away from today's session, that's the big one for me. It's like, instead of looking at a chart and figuring out how do I trade, like, know what you're looking for. Like, I'm looking for buying the dip, selling the rally, buying breaks of ranges. If you want to trade the range, we can trade the range. You know, I'm looking for a very specific setup. I'm looking to trade pullbacks, essentially. So know what you want to look for and then go and find it. Yeah. Absolutely, absolutely, Russell. Yeah. So this is a good example. So this is in an uptrend. It doesn't matter whether we say 3 months, whether we say 6 months, whether we say 12 months. It's in an uptrend. So now that we've recognized the phase, the trend is up. We can all agree. It doesn't matter whether you've been doing this 20 minutes, 20 months, 20 days. Everyone agrees this is an uptrend. So now that we know that, any downward movement is a retracement in an uptrend or a pullback in an uptrend. Sometimes the wording's a little bit interchangeable. So what we typically need next is an entry opportunity. And just because you're kind of brand new to this, there's ways to refine this, but a typical entry would be to enter above the pullback high. Entry above the pullback high. That's the most basic thing. So as price rallies and retraces, entry typically is above the pullback high. If you get a deeper retracement, you can refine an entry, which is what I was looking at on Zoom. But if you've just got a small retracement like this, just use the high of the pullback there. This is pretty much what I teach in all of my training programs, is how to actually determine, like, do I take the pullback high, or when do I refine my entry? There's time and a place to do it all, but I would say this is a small retracement. Wait for the pullback high. At your early stage of your trading career, Russell, you might just want to not worry about getting in as soon as possible. Get in when it's going your way is probably more important than getting in on a maybe trade. I would always think about getting in on something that is moving the right way, and don't worry about the dollar or two that you might have missed. If it's going to be a good trend, it's going to be a good trade, you're going to have a big move. That's what we're looking for with these types of patterns. We're looking for opportunities that are in line with the overall money flow and the overall direction and the overall movements. The overall trend is what we're looking for. And, if you've got the overall direction right, whether it's looking back over 3 or 6 or 12 months, you're not going to go too far wrong. And, just mistiming an entry is not such a big deal when you're overall moving in the same direction as the money flow. Anyway, I think we've got off the beaten track a bit. I think that might be a good place to kind of round up. I think that's a good place to finish. But ultimately, what we're looking for is opportunity. We're looking for stocks that have opportunity. And again, it doesn't necessarily matter whether we're looking for a day trade opportunity, which is what I'm focusing on right now. I've got several stocks that I'm looking at. And again, they're all the stocks I'm looking at for today. They're all on those top 15. So that's my watch list for today. It's a little bit smaller. My watch list for today is about 5 stocks. It's from those stocks that I'm drawing my attention to for a day trade opportunity. The other element of what we looked at today is, even though you may not be looking for day trade opportunities or short-term opportunities, you can still use the same scan to find a good candidates on the daily charts that might offer up a good swing trade. The same footprint of institutional activity is what we're looking for. We also took that a little bit beyond when we found a stock that looked interesting to say, okay, well, how do I find more of those stocks? How do I find that? And it's a very simple process to use the software to kind of sift and sort a mechanical footprint so that we can go and look at just 3 or 4 stocks every day. That's all I'm looking at. I'm not looking at hundreds of charts. And, as you've just seen, it takes longer to explain than to actually do. I mean, when we were just clicking through them, it takes just a few clicks to go and find something that is interesting. 3 or 4 stocks every day. If you just look for 3 or 4 stocks that meet that footprint, that criteria that you want to trade every day, you'll find 2 or 3 great trades every week. And you don't need many trades to make a good career out of this. And we've been doing this for over 20 years now. You don't need many trades every day. Even though I'm day trading, and that's what I plan on doing when I've finished talking here, is all I'm looking for is one trade. You know, when we go back to some of the slides that we were looking at this week, all I'm looking for is one good trade. I've placed 5 or 6 trades this week. If you think about it, it's just one trade a day. It's all I'm looking for. I had 2 yesterday, 2 break-even trades. I'm just looking for one good trade every day. That's how we find these stocks every day. You know, I'm just looking for one good trade. So it's not about the quantity, it's about the quality of the trade that we're looking for. So hopefully that makes sense. I think that's a good place to finish. Have the end result in mind and then go and look for the end results. That's how we're going to find stocks that go stonks. Know what you're looking for first and then go and find a chart that meets that criteria. And that is probably, I think that's the biggest takeaway that I can leave you with today. So that's probably an absolutely great place to finish. Folks, if you need a little bit of extra help, a little bit of help in hand, if you want to explore that, I'm very open to it. It may be that what I do is not right for you, and that's okay. What I do isn't right for everyone. But if you want some extra help and you want to talk about it, you want to see if it's right for you, then by all means, send me a message. So if I offer to help you profit from short-term explosive movements and you want to learn in the smartest way possible, you want to focus on the best stocks, the best times. We have one simple pattern. There's 9 variations of it, but really it's just one pattern. You want to learn that in the next 7 days in just an hour a day. I'll explain to you the money management system that goes along with it, the T.T.E, the time out, the target out, and the exit out system, which is the real secret to any success. And once you've mastered it, you'll start to see results, as I've shown you earlier, in the next few days, or maybe in the next 90 days or less. You'll never stress over which way the market's going, up or down. You'll profit in both directions. You'll never spend hours flicking through charts. You'll just zero in on the best opportunity today. And my big favorite is you'll never read boring company reports unless you want to. I don't like doing it, but if you want to read the company reports, you can do. It's not essential. But if you want to do all of that and you want help building trade confidence so that you can transition into the best possible trader that you can be, then send me a message. You can go and take a look at the information page around what we do. You can go to my website, antivestor.com/VWAP. Or if you want to just send me an email, you know, feel free to. I'm pretty accessible. Phil at AntiVestor.com. Phil at AntiVestor.com if you want to send me an email. And if you just want to visit the homepage, you can pretty much choose your own adventure. If you need some help with the basics, you've got the first choice here. The day trading strategy is in the center. And if you just want to focus on the swing trade version of the strategy, you've got 3 choices. That will help you become a better trader. And obviously, if you want to talk to me first, then by all means, send me a message and we'll take it from there. So that was it, folks. That was stocks that go stonks, go up and up and up and never stop. It's obviously my little joke on the markets, but there we go. But it's just how you can find consistent opportunities every single day. It's not about finding and trading everything. It's about looking for quality and over quantity. So with that, folks, thank you very much for your time. Thank you very much for your attention. It really is appreciated that you take a moment out of your day and you've decided to spend it with me. I trust that you found some great value out of today's training. And if you need me, send me a message. You can get me on email. In the Slack group, we've got a nice little growing community. And if you need any or have any questions or comments, by all means, send me a message. This has been recorded, so if you want to review it, the replay will be up in the Slack group later on today. And I'll speak to you all next time.